Good morning, good evening, good afternoon, depending on where you are in this world. This is Hedgen Lee with a morning update for Bitcoin. So yesterday I was talking about this kind of flame out wicks here, here, and here. Got a little bit of it. Price is clearly struggling to get past the 200-day moving average, and that's not surprising. I would have liked to preferred to have it shoot up to maybe 9.2K and come back down the way it is right now, but beggars can't be choosers. I think it is pretty much confirming that, well, this could be where the price might go a little more sideways for another day or two, and then we'll see, ideally, in this scenario of the upward wedge, price would re-enter back into the channel, and that would be bearish. That would confirm that this is nothing more than a bearish piercing of the top white trend line. Volume overall still remains muted, as shown like this. Now I know I'm not trying to make the volume line precise. That's not the point. Yes, you'll get every now and then a peak above it or peak way below it, whatever, but the overall trend line, and if you want to just use the average approximate trend line as well, across the peaks or so, well, geez, this rise that occurred 95% below the average volume line. That was the biggest giveaway, but more so to the fact that this here is an overall declining volume, and this is not good for a reversal. And again, as I said, if this 6.4K was the bottom, okay, and that was the bottom where supposedly capitulation took place, we should have seen a red volume, okay, not a green, a red volume like this, okay? Or even if not there, maybe the day before, this red volume should have been wowzers, right? Above the average, or above the trend line, so to speak, let's say. Okay? That's the way I see it. Now, if this kind of mighty rise, this kind of Herculean price increase was not able to stay above the 200-day moving average and merely succumb to the downforce, even with the mighty level of the volume, which generated the peak, and it was equal to the peak generation of the 14K, the flame out was long, and the torch flame of that flame out, the last fume of bullish buyers gasping for that FOMO price, was marked here, only to succumb to lower lows. If this was the bottom, in fact, volume should have been like this. Mighty volume. Capitulation volume. Nothing even came close to it. Okay? Not even close. We got sub-average red volume, and even this green volume was pretty much average at best. Okay? A little above average. So, mighty as this might have been, it couldn't reverse the price. And what makes us think that this would be the reversal? Taking place under sub-average volume conditions, without a capitulation volume. It doesn't work that way. That's why I've been very suspicious of this whole rally. That's why I've been selling into this rally. Now at 60% cash. My average price is now 8,515, according to my daughter's calculation on the proportion side. That means, let's say, hypothetically, it was the bottom. And we have 1, 2, 3, 4, and 5. Okay, 5 is in. Now we're going to get a wave 2 correction. If the wave 2 correction retraces 50 or 0.618, we're going to go back to 7.4K or 7.2K, somewhere in that range. I'll buy with my 60% cash. In fact, I'll have more Bitcoin than what I had before. Great. So in that scenario, where if I'm wrong, this is wave 1, this is the bottom, we got 1, 2, 3, 4, 5, this is a leading diagonal, we have a wave 2 correction coming, I think I'll still make out pretty well. But I don't think that's probably the case. My primary count is that this is a bear rally, an ABC, 3, 3, 1, 2, 3, 4, and 5. The reason why wave 5 can be really short in this case is because wave 1 is the longest. If wave 1 is extended, 5 really becomes short and very, very stubby. Now I know that the day is not over. We can go up, 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 and maybe I'll get my size of the wick and then come back down again. That'll be great. But the fact of the matter is, in my opinion, the correction is probably not done. The mightiness of this rise is nothing when measured in volume. I also showed you the hidden bearish divergences. Now let's look at the BitMEX funding rate. When the BitMEX funding rate goes positive, it's not bullish, it's bearish. When the BitMEX funding rate goes negative, it's bullish. There is more propensity for the price to react upwards. And I use the BitMEX funding and premium index, the neobutane. And this really is an indicator that's really no different than any other indicator. The fume, the bull fuel, the gasoline that ran this through FOMO-driven, I can tell you the big players are already probably out. They have probably exited, and what's giving this kind of little impish up and down, the last remaining hurrah, maybe even a long spike up and down, are the late bloomers, late FOMO bloomers, retail usually coming in to get slaughtered. What will make me bullish? As I've said, I've been looking at this 200-day moving average for quite a while. If we bust through this and stay above this and the price makes a 200-day moving average supporting, we continue upwards, awesome. I'm going to be a bull. Okay? I'm going to be putting in bullish trades. But the fact of the matter is we have Mama and Papa and Big Johnny to consider. If you zoom into this fractal, you'll see how this wedge took it to a lower low, lower than the origin of the wedge itself. And that is classic wedge pattern resolution. It doesn't always go that way. Okay? And look how also the decline was in 3 waves. A, B, 1, 2, 3, 4, 5 for C. Okay? But I think this wasn't right here, ABC was another event. Look at the diagonal. This was a beautiful 53535, the ending diagonal for C as subwaves in an upward wedge pattern, ABC. So we have not only two fractals, but now three fractals. And if you think about it, there's another mini fractal right here too. Okay, and to me, this is how bearish, tendencies work. I would ideally like to see a big stab above the top line, but not required. I like to see a long wick. That would be most ideal for me. Just to stab and peg and fly the upside down wick flag that this is as much as what the bulls can pull. So this one went below this wedge. Price went below the origin of the wedge. This was what, 6.5, and this was 6.4, but not by that much. Okay, but still met the classical conditions of a upward pointing bearish wedge resolution. Now, big Johnny boy here. That's a big wedge. And the starting point was at 6.4K. If we get the downward resolution of this, can we then be seeing that long capitulation volume? I think so. Maybe it'll go this high. Who knows? But it better be long, high, tall, and fat. And not only that, have strong echo repercussions like this, but maybe not as high. And on that declining volume, above average still declining volume, we'll get maybe a low and a new lower low. We saw that before. Here is November, December of 2018. Capitulation, big volume. Lower volume, lower red, lower low. And what was this pattern? Oh, it was the opposite of what we're seeing, a bullish downward wedge. Come figure it out. Oh, wait, here was another bullish downward wedge as well. Okay, and let's say you missed this. Ooh, 5 waves very clearly. 1, 2, 3, 4, and 5. Ooh. It's okay, because usually once the bottom is hit, there's a big flash up, and then there's a slow bleed of at least 61% or 88% correction. That's exactly what happened. So if you missed this, you get in here. Here, by this time, you'll see the evidence of performance of the bottom of the capitulation and the echoing lower low with a lower volume, but still above average. And in this correction, you'll see the declining volume. And you may see maybe an inverse head and shoulders or what have you. Okay? Now, let's go to somewhere here. Okay? Where people thought, oh, this is the bottom, maybe. Okay, this is the bottom. Boom, 1, 2, 3, 4. Holy shit. We have a 5-wave up. Bona fide. Hedging will love this and call this wave 1, 2, 3, 4, and 5, and to all-time new highs we go. Where the hell was the red? Where the hell was the volume like this here? Nowhere to be seen. So a breakout without volume is almost always a fake out. Almost always. I've seen some exceptions. Okay? But wait a minute. I see a... Wow, look at this. Oh. Do we have an inverse head and shoulders? Oh. Here's the left shoulder. Here's the right shoulder. And here's the head. That's got to be the damn bottom. This, we have a reversal pattern. We've got a 5-wave impulse, but no capitulation volume. So, oh, look, this is a 200-day moving average. Price couldn't even touch it. Can close, pretty damn close. Do I see a big Johnny sized wedge? Imagine that. Oh, wait, here's another one. Left shoulder, head, right shoulder. It's almost like the fractal of what we just saw right here. Another wedge. Upward wedge. Keep this in mind. Now let's time travel to the present. And what was everyone harping about on YouTube? They were yabbing about this inverse head and shoulders. Left shoulder, head, right shoulder. I saw it, I knew it, I was aware of it. I didn't like the fact that it wasn't as clearly defined, too damn close between the left shoulder and head, but everyone was yammering about this. We have a inverse head and shoulders, upward wedge, but damn it, no volume. We saw that. We saw that right here in 2018. Well, look. Then price collapsed, moved sideways, and did what? It did the capitulation. So, let's try this. Let me take what's called, oh, the video's getting too long now. I'm going to try to finish it. Otherwise, it's too big of a size for the server to upload. I'm going to do what's called a bars pattern. From here down to the bottom, capitulation, right there. Oh, look at that. And then I'm going to move this right over here. I'm going to move it right over here, maybe. Okay. Ladies and gentlemen, I see very little difference from here to what's happening maybe here. Okay? I mean, there is a difference. Of course, nothing happens exactly. If this is the case, we'll break down, do one more gas pipe, do another bear piercing maybe, go lazy sideways. Oh my gosh. Are we approaching the halving? Yes. And that's a damn good time, maybe in early May, to do that freaking capitulation. Shock the hell out of all the YouTube bull, FOMO talking heads, doling out their doodads and Bybit affiliate links, knowing full well that all those people who do leverage trading shouldn't be there, and they get paid only when those leverage retail newbies lose money. I refuse to do affiliate links for doodads or any leverage trading or Bybit. I said no to them. They send me emails, and I give them a lecture on how it's shame on them. Well, anyways, this, I think, could be the big picture that could play out. And where do we go? Oh, this could be the 0.94 or 98, 0.96 fib retracement. Very interesting. Very, very interesting. This has been in my mind for a long time. And I know, I feel I'm a human being. While this is going up, and I'm thinking, oh my God, I'm selling. And I could be wrong. I could be completely wrong, yes. I was I was duped into believing this mighty thing was where the bottom is. But the bottom is never a green candle. Capitulation is never a green candle. Repeat that. Capitulation is never a green candle. Capitulation is always a red, a red candle and a red volume. Never green colored. So I think this is very interesting. And I hope you do as well. Have a great day.